Welcome back to the program. Today is a liberation day. Trump's reciprocal tariffs kick in, and we're going to see what the market impact could be from this decision. Will this reciprocal tariffs and unfair trading practices from other countries, or will it be a liberation from your money, and will the market tank? Let's have a look first at Donald Trump's announcement at the White House.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense. But now it's our turn to prosper, and in so doing, use trillions and trillions of dollars to reduce our taxes and pay down our national debt, and it'll all happen very quickly. If you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything, but now we're going to charge. European Union, they're very tough, very, very tough traders. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%, so we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff. My answer is very simple if they complain. If you want your tariff rate to be zero, then you build your product right here in America, because there is no tariff if you build your plant, your product in America. And we've seen companies coming in like we've never seen before. Likewise to all of the foreign presidents, prime ministers, kings, queens, ambassadors, and everyone else who will soon be calling to ask for exemptions from these tariffs. I say, terminate your own tariffs, drop your barriers, don't manipulate your currencies. They manipulate their currencies like nobody can even believe.
Okay, so before we get into the charts, let's have a quick look here at a few posts on Twitter here. Andre Dragosh saying, I was once told by iconic analysts that the best moment to buy a risk asset is when the ISM spikes downwards. I think we're approaching that moment. And you can see the chart here, yesterday's ISM data coming in. And of course, we are in contraction. We are below 50. And you can see ISM new orders minus inventories being even lower. And it makes total sense because, of course, companies would have stocked up before the tariffs kick in. And now we're in a situation where these companies have massive inventory in the face of reduced consumer spending. And this stock is going to last for a while. And this is probably going to play in Trump's favor because these companies, they're not going to need to restock for a while. And with these tariffs in and, orders being lower than other countries that are going to be suffering from those tariffs, they're going to be suffering a lot more, I guess, than the United States comparatively. And it's going to give Trump tremendous leverage in negotiation. we will see if how long if these tariffs stay on. But let's have a look here at another one from a Zero Hedge that was a few days ago. And of course, we've been talking already in our previous videos about inflation expectations and how they are sort of detached from reality. Here's Zero Hedge noticing that the inflation expectations, as you can see here, from Democrats, Republicans, and Independents are totally opposite. You have inflation expectation from Republicans at a 0.1% and from Democrats at 6.5%. And what they notice here is that the Democrats now have a 6.5% inflation expectation, when while Joe Biden was the president, their expectation was only 3%, while in reality, the actual inflation was 9%. And this is the UMich survey, and we can see how it's becoming totally irrelevant because these surveys now are driven by narratives. You have people who are answering things that they don't actually believe, because if Democrats actually believed that inflation was 6.5%, when they believed back when inflation was 9% that it was only 3%, then they would expect some inflation that would be so high that they would have stocked up massively and bought tremendous amounts of good in provision for that. And that wasn't the case. They did not do that. So essentially now we have these inflation surveys and inflation expectation that is totally detached from reality and is actually detached from what people actually believe. People answer things because they do so on a partisan basis, but they don't actually believe that this is going to be the case. And so we will see if the Federal Reserve will take action upon that, or if they completely ignore that and realize, okay, this is not reality. People are just saying that because they want to follow a narrative and they want to embrace a political bias into their answers. And the reality is going to be pretty different. We will talk a little bit about inflation and what the impact of those tariffs will be. But let's have a look here a little bit at the market. And as you can see, from the end of February, of course, market has gone down quite significantly. I think we are probably around 5% or something like that. Let's say, more 10%. And, we got to the lowest point, today and a little bit before the 31st was one of the sort of the lowest day. Today we had this sort of doji going on here, with the market sort of going up and down, but ultimately we're closing here higher than we did close on the 31st, which was this lowest point. And now, the bad news has sort of been digested, and you have to understand that, of course, the stock market is a forward discounting mechanism. And the sentiment now is extremely bearish. People are expecting, okay, now that these tariffs are coming into play, the market is going to tank. But that's not really how it works. And the fact is, the market anticipates what happens and anticipates the news. And so just as it was the case when Donald Trump, the inauguration of Donald Trump, when the market was at the highest, you have this, buy the rumor, sell the news. And here on the other side, it's pretty much the opposite. It's, sell the rumor and probably buy the news here. The bad news has sort of been digested by the market. And now, it cannot really get worse than that. The day where you have these strong tariffs kicking in, well, it cannot get worse than that. What is going to happen? Are they going to increase these tariffs? No, they're not going to increase these tariffs. If things stay as they are, then, then the market has already anticipated this drop. And now, if the countries that are affected by this tariff decide, okay, we are going to lower our tariffs to see the United States lower the tariff that they just put in, then the market will have only up to go. So, if you take this here and you take this downtrend line here. This is probably a good tradable breakout. You have an invalidation here that's very close. Only just let's see what 1.2%, 1% from here. And if we were to go back to all-time highs here, we're talking about 10%. So if we're going to take this long position here, we would have a pretty good risk to reward ratio here. If we were to go back all the way up to here, you get, probably 10 risk to reward ratio here on a trade like this. And if you listen to sort of the analyst, the contrarian analyst, people like David Hunter, who had a target for the S&P at 7,100 here, and Henrik Zeberg that I watched a few days ago, who up his target here at 6,800, then that would be a big way from here, a 25 to 1 risk to reward ratio. If we were to see something like that, of course, that wouldn't happen necessarily in a straight line, and it would take some time to get there. But essentially that would be the view that we have now sort of reached a possible bottom. And if it is not the case, if we were to go into a major recession, for now anyway, the invalidation here would be pretty close. So you would not lose that much, just 1% compared to a positive trade here that could be very, very rewarding. Now, another point to consider is, of course, the yields. The yields are going down, but we haven't seen really sort of a catastrophic flight to safety. And that would indicate that we're not in this kind of a catastrophic scenario where a recession is imminent and the economy is going to go in the gutter right away. We have a bit of a head and shoulder perhaps going on here on the yields. And of course, that would be good for the market. If the yields were to go down now, it would push capital toward risk assets, and that would be good for the stock market. That would be good for Bitcoin. And, if we see some orderly move in the yield toward the downside, then this would be positive for the market. And as long as we don't see a catastrophic move, then this is probably not sort of the kind of pessimism that the sentiment would suggest. Now, if you look at Twitter, people will tell you this is the end of the world, and, this market is going to absolutely collapse. And that is the type of sentiment that you would see at a local bottom. And if we look, sort of at the VIX here, as you can see, yes, we spiked a little bit here over the last few weeks, but nothing compared to even this spike that we had in August with the Japanese yen carry trade unwind. that was, that ultimately resolved to the upside. And so if we were once again in a super catastrophic scenario, then you would see a spike on the VIX that would be much higher than this one, and that is not the case. And that's another indication that the sentiment is wrong, and that most likely, we have seen, most of the drop, if not all of the drop. The DXY also finding bottom here at the 103 mark, and we've hit that level quite a few times and rebounded from here. Now we could very well move downward from here and go back into this trading range between 103 and 100, and that would also go along the same route. It would also be good for risk assets if that was the case. Let's have a quick look here at Bitcoin. And of course, ever since the Trump inauguration here, Bitcoin has sold off. We found here support at the daily moving average. This one, I believe this is the 300 perhaps. I'm not sure. Let's see. Can I get this? This is the 300, the red one. So, finding some support here. And now, since then, we are also moving higher. Perhaps here again, also a tradable breakout on Bitcoin here on this line. And we haven't necessarily broken out of the trend line yet. But when we do, then there is a possibility to have a pretty decent trade here with invalidation. That's going to be perhaps a little more expensive here than it is on the S&P. But of course, this is Bitcoin and it's quite volatile. But we'll have to see how things develop here. But, the sentiment now is so bad that, it seems that perhaps there is only some positive that can come out of this market now, because everybody is so bearish. Everybody has sold everything. Everybody is short. And now if we see a move in the other direction, then everybody is going to be piling into the trade, and then we're going to see a major reversal. And if you listen to sort of these these analysts, like I mentioned, David Hunter or Henrik Seberg, they expect sort of a major move up now before we reach a top, then see a strong reversal and perhaps a prolonged recession that will sort of be brought by not only the situation in the US, but of course a sort of a freeze in a global trade because of all the decisions, of course, on these trade tariffs. That is not going to help. But anyway, we will see what will come out. But as of today, the news, Trump's reciprocal tariff kick in at midnight tonight, and we'll see what the implication for the market will be, but perhaps a good trading opportunity for those traders who can take the heat. Anyway, thank you all for watching this video. Don't forget to subscribe to the channel and leave a like, and I will see you all on the next video.
Hit me with that like, and sub to the channel. Hit me with that like, and click the effing bell. Click that bit, alright. The algo recommends, for she don't like. The algo knows you well. Hit me with that like, subscribe to the channel. Hit me with that like, and click the effing bell.